Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the Smartkarma Weekly Forum. The forum is a high-impact weekly live webinar that's exclusive for Smartkarma Plus subscribers. We use this as an opportunity to discuss the best, highest conviction ideas and insights as surfaced across the Smartkarma network. Please note that the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers. And lastly, Chatham House rule applies. Every week, we bring to you 3 key ideas from across the network. We typically look for a large cap, a small and mid cap, and a key thematic that is catching the attention of readers on the platform. In our last forum, for instance, we looked closely at Alibaba, a name that we have liked into its weakness. We also started to inspect a fairly contrarian idea around consumer staples, and we explored the FX markets in a bit more detail and looked at which emerging market currencies have actually struggled the most ever since Russia's invasion of Ukraine. This week, we will be looking at one of our top picks within the Chinese education or consumer space. This is called China Education Group. We will then look at a commodity name called Los Andes Copper. And lastly, in our thematic section, we will take a look at China's evolving electric vehicle industry. Let's kick things off with China Education Group. The ticker is 839 Hong Kong. The market cap is just over $2 billion. Oscar Tang, who's based in Shanghai, covers this sector for us. And as you can see from this chart, there are a lot of green circles, which means we've liked the name, although it has fallen quite a lot. In fact, at the start of the last 12 months, it was trading close to $18 a share, and today it's just below 8 or around $8 a share. First things first, what is China Education Group? China Education Group provides private university education, training, and other services in Hong Kong and China, mostly mainland China. It is actually the largest listed private operator of tertiary education in China. The business is doing extremely well. Its first 6 months of the year, profit surged 40%. Now, adjusted profit rose by a smaller amount, which is 20%. That is adjusting for new acquisitions that they've done. The company continues to grow through organic growth as well as through buying up other universities, improving them, and bringing them under the same brand. There has been recently a very important new catalyst. The government has given China Education Group and some of its peers the ability to increase enrollment quota. For China Education Group, they have allowed up to 70% growth in enrollment quota. Not only is this positive from a revenue and growth perspective, but this also clarifies or dispels any doubts that investors might have had around regulatory risk in this space. As you will recall, at the start of this year, there was a lot of concern around regulatory crackdowns on the Chinese education market. Our analysts had continued to observe that these crackdowns are limited to the online education space, especially the tuition market, and that tertiary education providers are in fact key or net beneficiaries of the regulatory thrust, and that is now starting to pan out. However, at that time, the market panicked and sold down these stocks. So now you have a chance of buying the best, the fastest growing, the largest education company in China at a single-digit PE. Not only that, China Education Group recently announced a buyback program where they announced they will buy back up to 500 million RMB worth of stock. This is great news, and it will support more southbound investment into this company from onshore China investors. That sums up the thesis. It is probably one of the best names, highest quality names within the consumer discretionary space in China for us at the moment. Moving on to Los Andes Copper. This is a small cap. Market cap is just $330 million. It's listed in Canada. It's a name that's covered by Nick Van Broekhoven, who looks at some of the smaller resources names. So Los Andes explores for copper in Latin America, and it's got a tier 1 copper asset in Chile, which, as you would know, is one of the largest producers of copper in the world. As things stand, copper supply, when we're talking about global supply of copper, is going to peak in FY24 and then continue to decline sequentially from then on. However, the demand for copper is going to continue to accelerate due to electric vehicles and, data centers and many other drivers, really. For Los Andes Copper, its prime asset continues to grow nicely. They have a new CEO who has been mandated to find a buyer for the asset. As per Nick, assuming steady sort of copper prices, you get a valuation estimate of about 30 Canadian dollars a share for the company. Of course, with a lot of these resources companies, they tend to require capital for growth. So we should, however, look out for any dilution events over the course of the next few years. But this is definitely a tier 1 copper asset at bargain valuation levels. I'm going to move on to the third and final topic for today, which is China's evolving EV industry. As you can see from the chart on the right-hand side, this has been an industry that is seeing exponential growth, and Global Autos is covered by Mio Kato on the platform, and it's his thematic insight that we are featuring today. We also have analysts based in China who cover the automobile sector closely, but this is a global perspective on that Chinese space, which is pretty interesting. So first things first, there have been very supportive government policies around EVs. They've continued to extend subsidies for consumers. They've strengthened quality supervision, and overall the quality has been a very big driver. More recently, the government has announced a goal to develop charging infrastructure to meet the needs of 20 million NEVs by 2025. If we look at the 2021 volume sold, it was around 3.5 million units. So this means the government is definitely looking at a strong growth in the years ahead. It's worth noting that EVs is going to be one of the strategic industries to help China achieve carbon neutrality, which has been another one of China's key goals. We're starting to see the industry reach a tipping point. If you look at the years from 2018 to 2020, the industry was still finding a footing. But 2021 has really been a watershed year when the sales broke out and we had nearly 3.5 million units sold. We are continuing to see that growth accelerate. Over the last 12 months, electric vehicles have been roughly 16% of the total auto sales mix. And over the next few years, we think they will become the majority. There are several players in the market, and Mio Kato discusses that in detail in his insight. We will see more consolidation in that market as well over the coming years. As it stands today, BYD is the leading domestic player and Tesla is number 2. It is, of course, an international player in that market. With that, I'll open it up to any questions that you might have. Otherwise, you're very welcome to use the discussions feature on our platform to post questions for analysts so that they can reply to you directly. Okay, if nothing further, I'm going to wrap up today's forum and look forward to speaking to you next week. Bye now.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.